Hello, it's been a while since we've been on Habs. Hi, this is Monica RW, and I am doing a presentation today. And this is Monica RW from MRW Solutions Group. We are licensed life health and wealth management consultants covering the great states of Michigan, Ohio, Virginia, South Carolina, and I'm missing two. Texas and Arizona. And so what we're going to do today is that we're going to do a presentation on the value added proposition. And that is going to be covering pretty much, it's going to give an insight of the life, health, and wealth management solutions that we cover. And we are licensed for at MRW Solutions Group. Because a lot of times people ask us, okay, what do you do? Right? Because we have so many different facets under our umbrella, under our product lines that are available with MRW Solutions Group LLC. And if you can go on our website and find out more, www.mrwsolutionsgroup.com, to find out all of the things that we do. Including our Medicare 101 education, which I believe, if I have it correct, there is a previous video that you can look at if you are on our Facebook page. You can go up under our videos under our Facebook page, whether you are on the Monica or WMBA LIA page, or you are on the MRW Solutions Group LLC page. You can look at our previous Medicare education presentations, or you can actually go on our website. We actually have them connected at the bottom of our website on page 1, where you can go and look at the presentations that we have done. And just a heads up, we are going to be doing another farmers market. That's actually going to be coming up on June 26th. We're going back to the Saline Farmers Market. That is going to be from 8 to 12 at the Saline Farmers Market. There's more information available on our Facebook page if you're connecting there under our events. And please come out to the Saline Farmers Market and you can get some on-site Medicare education. We were just at the Dearborn Farmers Market about a week and a half ago, and we'll be going back to that one, I believe, in mid. So it's really exciting to have all of these great events that's coming up. And we will be inside Walmart come in October to December. I think it's going to be around October 1st to December 7th. That is going to be for AEP, the annual enrollment period for Medicare. So we look forward to answering questions and also if you're looking at that point in time to be able to switch or change your plan, we can officially do that because that is the annual enrollment season for Medicare. So we can talk more about that after we finish today's presentation on the value added proposition, which is life, health, and wealth management solutions. And again, that is going to be presented by me, Monica RW, MBA LA licensed insurance agent for Solutions Group, which we are licensed life, health, and wealth management consultants. So how about we go ahead and get started on the presentation here today. So let's click. So what is a value added proposition? Well, we're going to talk more about that inside of the presentation. We already talked about who we are and where you can email us. You can also email me if you have any questions at monicrw@mrwsolutionsgroup.com. Okay, so I'm going to go to page 2. So, like, what does life, health, and wealth management solutions consist of? Well, it is a total package, right? That includes life insurance, annuities, health and wealth management, also insurance, Medicare supplements, Advantage, and indemnity product lines, which can include deductible replacement, travel insurance, health matching accounts, etc. So we want to make sure that when we're looking at life, health, and wealth management solutions for you, that we're looking at the total package, right? We may be concentrating on one aspect. Maybe we're just concentrating on Medicare, but in the same aspect, it may turn out later that you need to look at life insurance products or final expense, or better yet, even retirement options, which is available within annuities. Or you want to get some cancer insurance just to make sure that if that happens, if it unfortunately happens to you, that you are covered and you're going to have outside of health insurance policy to help pay for any type of cancer diagnosis that may come up. So those are total life health and wealth management solutions, and those are things that we can do at MRW Solutions Group. Let's go forward. So, like, what do you mean? Can you explain all this more, Monica? You got a lot. I need you to break it down, right? So, that's what we're going to do here. So, life insurance. Well, some people look at life insurance as mortgage protection, some as whole life, term, or universal, and final expense. Don't worry, we're going to break down each one. Health insurance, private individual, right? ACA, which is Affordable Health Care Act insurance, and that is insurance available through the Affordable Health Care Act, small, group, or Medicare. So I'm going to say a little pedicab before we get into this. Yes, private individual health care plans are still available outside of ACA, but they do have some pedicab plans are. Annuities are life benefit living benefits. Sorry about that. Living benefit retirement plans. So, in other words, these are extra retirement 401k if you have a 457b, if you have a pension, you can put a designated amount of money inside of an annuity plan that is going to be actually invested on a fixed or variable benefit. Sometimes it's indexed. We'll talk more about that going forward. But in the same aspect, you can withdraw that money at a that's designated on your behalf, right? And you get those benefits while it is accumulating. So we'll talk about more about annuities shortly. Deductible replacement. This is my favorite because a lot of and they also come in the form of health matching accounts. So just say you have that you have to get some implants. You got to get some dental implants. Oh my goodness, it's going to cost me $5,000 in order to get it. I know I'm going to have to get these dental implants in like a year. I'm trying to figure out a way that I am not going to have to pay, $4,000 out of my pocket because my insurance is going to cover 1,000, but other 4,000. So what can I do? How can I save some money? Well, again, value added proposition, deductible plans, health matching accounts are some ways that you can actually save money, and it provides cash payments for copays and deductibles. We'll talk more about that in the presentation. Pet and travel insurance. Yes. Okay. So a lot of people have pets, right? I have pets. I'm sure, many of you listen. And so when you have to take your pet to the pet clinic, sometimes it can cost you a little money, right? Money that you have not expected. So that's coming out of your savings or other money that was designated for something else. So we can actually matching accounts, which is the same I was saying for like the dental, but this is for the pet, right? To cover the out-of-pocket expenses that relates to your pet. Domestic and international travel protection. Hey, everything is open, right? And people are travel again. So with that, when you go traveling domestically, you got a that you're going on. Maybe students are beginning to come back in. They will be coming back in September, maybe even earlier if they're international students studying over here. These are things that travel insurance and also student insurance that we cover that also. If you're having a student come over for exchange study, cover that. We can make sure that basically all of those expenses are covered. So we can talk about more, get through the presentation. Alrighty. Life insurance. Why is it important? Okay. This is what we do at MRW Solutions Group. It's one of the many things we do. We want to make sure that if that occurrence happens, that your family members are not and basically doing a GoFundMe or whatever else have you to try and basically make sure that your final expenses, that your expenses that are relating to your life are like, covered. Like, first of all, just break it down. A cost of a funeral is anywhere from 7 to 10,000. That's a funeral that you're getting. If you're even other options, that can be 5,000. And so if the family members don't have that readily available, they have to go and kind of save that tax before it kind of scramble at the last minute. Those do not have to be options for you and your family. They literally do not, because that is what life insurance basically is for. It is to pay for those expenses. It also provides other benefits while you're actually living. So let's talk about it. Term insurance. So term, and like, yeah, I want my money back. Well, that's called a return of premium. And sometimes in some policies that can be available as a rider. Spouses or child policies. So just say you have young kids, right? And life policy for yourself. Yeah, you can actually, on some writers, get insurance policies for your kids. They can be anywhere from $3,000 to $10,000 that will cover each child that you have. And your spouse, right? You want to get a policy for you. You want to get a policy for your spouse. You want to get a policy for your kids. All of those are available under term life insurance and also whole life insurance policy. Unemployment waivers. Like a lot of people, especially over the last year, they end up being unemployed by no fault of their own. And so because of that, if they would have had a life insurance policy, it's like, okay, I'm trying to figure out how to just make sure I keep my bills paid. And then on top of it, I have this life insurance. I'm trying to make sure that that gets paid. Wouldn't it be great if you just waive that payment for like 4 or 5 months while I catch up? Well, unemployment waivers are available with some term life insurance policies and whole life insurance policies, depending on the policy. So these are riders that can be added onto a policy. I talked about them from term. We're going to flip over to whole life insurance here. Whole life insurance policies can last over the lifetime of the benefactor. That's again the client, the person that's got the policy in their name. The premiums can build cash value over the time of the policy. It can be withdrawn or left untouched. Whoa, did you just say value added proposition, Monica? Yes, that's a value added proposition of a whole life insurance policy. So just say you need to withdraw some of that cash because you have a child that's going to school. You may need to put a down payment on a house. You may need to use that cash because you may have to go invest it in something else. Well, if you have that whole life policy that has built that cash value, you use that cash value amount that you then obviously built, right? In order to withdraw that amount, that cash value, right? In order to do prefer. So that is a living benefit. That is what we call a living benefit. So life insurance, people always think about, okay, it's only for if I die and I'm leaving something for somebody else. Well, it can also be for a benefit that is for you while you're here, right? So, meanwhile, between time, the growth on that cash value is tax deferred. So when you take it out, you will have to pay taxes. But additional riders for whole life insurance can include a return of premium in certain policies. Again, spouse and child policies, accelerated death benefits, accelerated critical illness benefits, and more. I'm going to flip back to that term policy because you know what? Accelerated death benefits and critical illness accelerated payments can be available in term policies too, depending on the term policy. So, in other words, if you get critically ill and you need to use, a part of your policy, I'm going to say in this case, it's $150,000. you have $50,000 that you need to use because you're critically ill, you have expenses related to that, et cetera, et cetera. So in that case, if that happens and you have that money available and that rider available in that policy, you get that $50,000, right? Guess what? All it's going to do is reduce your death benefit. So in other words, that death benefit is coming from 150,000 to $50,000. Talk about value added proposition. Again, living benefits, that's one. Accelerated death benefit. So in other words, basically, maybe in this case, you want to have the money before a death, right? You want, that yes, the terminal illness, etc., and you want to be able to use some of that money for certain things before you die. Well, okay, so then that's accelerated death benefit. You can withdraw a certain that designated amount of cash, whatever that accelerated death benefit is, and then you can use that in order to take care of things before you die. Again, living benefits. I always say this because people think that life insurance don't have any living benefits for the benefactor, and that is just not true. Depending on, again, the writers, you have that policy. Yes, they can actually have living benefits while you're alive. Uh huh. Okay, let's flip. Let's look at some other things. So, next, we're going to talk about universal life insurance. Like a lot of people like to get these because similar to whole life policies that are in place, they are for the benefactor, their lifetime, and they're permanent. So the difference is about how the premiums are handled and access premiums are managed. So sometimes with a universal policy, you can pay less in a premium, even though your policy may be, I don't know, in this case, let's say you got $250,000 policy, right? You're going to pay less in premiums. Don't worry, you're going to catch up. You're going to end up catching up, right? And so that allows you to basically level those premiums in order to match the income level that you may want to get to. So just say you're starting out, $25,000 is what you're making a year as an income, but you want a universal policy that's going to be like just going to say $250,000. Well, your premium is going to be lower, maybe in the first 3 to 5 years, increase as time go on. That is an option for a universal policy. So again, the differences is how the premiums are handled and access premiums are managed. So let's talk about that. Premium payments can be made anytime and any amount versus a regular schedule, right? So how does that work? So how does that work particularly? Is that, again, I was talking about how you got that bill, right? Right. Okay. So cool. So then basically now you're saying, okay, I'm at that level. I'm at where I can be now. Now I can afford to pay, $75 a month on my universal life insurance policy for $250,000. That's basically, you can adjust that. You have that right to adjust that inside of a universal policy. Excess premiums are traded on the stock market based on the investment strategy that the benefactor and the insurance company agrees upon, such as the cash value of the policy varies depending on the modes of investment. So with this, what you want to really be aware of is that, you're okay. So if you go universal policy and it says, okay, my rate of return is supposed to be 4%, great. You want to make sure that that's actually happening, because you don't want a situation, right, that you have a lot less money in the universal policy than what it is that you anticipated inside of your return. That can happen too. So you have to make sure it is like that. Again, make sure that that's clear. The cash value of the policy varies because you're basically basing that on investments. So that means there could be mutual funds, there could be, stock market traded investment, etc. Right? Next, a final expense insurance or final expense insurance. Well, guess what? People say final expense. Oh my God, that's like, oh, I don't want that. No, it's whole life insurance too. It has a smaller death benefit that makes the policy affordable. So for people who are up, just say you're past 40, right? Or past 45 or even 50, and you have some health issues, right? It can happen. It happens to a lot of us. So with that, you still want to have a benefit that can pay off your final expenses. Maybe leave a little bit to whoever it is that are your benefactors. Well, that's what final expense kind of helps take care of. And it provides protection of expenses relating to death. Now, the policy is permanent. Since final expense too can build up a cash value, they are also eligible for benefits like accelerated death benefit rider, which is an option for dispensing cash while the client is alive for a lower death benefit. So when I tell people that, and I try to make sure I'm emphasizing this, life insurance is not just about, in some cases, what you are leaving others. It can be about what you are giving yourself. Just saying, value added proposition. This whole term universal final expense, which is another form of whole life policy, can be about what you are giving yourself too, and what you're, giving as a value added proposition for yourself, as well as the ones that you're leaving behind. Okay, so life insurance. Again, depending on the type of policy, it can be a means for investment vehicles as well as some build cash that can be withdrawn over the life of the policy. Life insurance is designed to ensure that death expenses are not left upon your loved ones. Paying off mortgages, cars, other living expenses accumulated over time upon death are the primary reasons to consider adding life insurance to an individual's wealth investment strategy. And life insurance, depending on the face and the cash value in certain policies, can provide additional cash building options for benefactors named within the policies and or their loved ones. Because if you're building cash value in a whole life policy or a universal policy, or even a final expense, which is also a whole life policy, you can not only you take those cash values if you have not, if you decide that you need them for some reason, but also it can build on top of the policy, right? Because cash value is cash value. So if you have a policy in this case that's for $50,000 and you didn't build, in that case, I'm just going to say, let's just say 50. So we're going to say you built $10,000 worth of cash value. Guess what? That's $60,000 for your beneficiaries, right? So that's going to help them. That's also cash value $10,000 that you can use for yourself while you're alive. So yeah, it does build additional cash items. I mean options, depending on the policy, for the benefactors as well as yourself. Uh, See, and your loved ones. Okay, let's get into health insurance, right? I love talking about this subject. Give me just a second. So, everybody knows right now about the Affordable Care Act, right? Also called ACA, also called Obamacare. It changed how individual, private, or group policies are structured. The following must be included in all ACA approved healthcare plans: emergency care, hospitalization, lab testing, maternity care, mental health care, outpatient services, pediatric services, prescription drugs, preventative care, rehabilitative services. And give me just a second here. I'm hoping you're not hearing those bings. Rehabilitative services and care. Additionally, under ACA, you cannot, repeat, cannot be denied health insurance due to a pre existing condition. Men and women will pay the same rates for the same services. However, the pre-existing condition, smoking, that's what I'm saying. That is it. That's the only one. Can be subject to ratings on the private insurance marketplace, right? And for ACA, you can pay a little bit higher for smoking if you're a smoker than you do for regular ACA rates. But otherwise than that, pretty much you're going to be paying the same rates as anybody else, right? Except that we're talking about the private insurance marketplace, which we are going to be talking about shortly. Okay, so that's what I mean by short-term medical plans. So a lot of people thought that with ACA, well, that's it. There's no other like private insurance. Like, nope, doesn't exist. That's not true. There are term medical plans, individual group plans that are still available in a post ACA world. Now, they do have some predicates, and we're going to talk about it. Short term plans, low cost, usually are higher deductible insurance. So they may have low cost, but they're going to be higher deductible for you. Now, they usually are for 30 days to 36 months more for coverage. That depends on your state. Some states offer the maximum of benefit of 36 months. Short term plans cannot, repeat, cannot be included inside of a small or group healthcare plan. So, if you are a small business, you cannot go get short term healthcare plans to cover your employees. It does not work. They can get them for themselves if they like, but you cannot go and get them for them because that's a small or large group healthcare plan. However, they are not required to cover ACA essential benefits. And this is where that pre existing condition thing is going to come back in. They don't have to cover pre existing conditions. They don't have to, they don't count as minimum essential coverage either. They don't provide essential health benefits of ACA. They primarily act as catastrophic coverage. Uh, they may have a limited selection of doctors. And you can't get ACA cost assistance with a short term health insurance plan. That means that subsidy. And it may impact your COBRA coverage. If you're on COBRA, it may impact it. So why would a person knowing all those don'ts and uhs get a short-term medical plan? Well, maybe there's a couple of reasons. Okay, so maybe they are in between jobs, right? And the short term is cheaper than the off exchange. There's off exchange and on exchange ACA. Pretty much, most of it is on exchange now because basically people can sign up for ACA for extended period thanks to the Biden administration. But in the same aspect, there was, and maybe will be again, a time that you cannot sign up for ACA, right? You outside of the open enrollment period. Well, in that case, you might want to do a short term plan because that will give you some coverage until you get to be able to sign up for ACA off exchange or on exchange, right? Now, mind you, you can sign up for ACA off exchange. Let me explain what that means. That means that you're not within the open enrollment period. But those prices are higher, right? So some people want to do short term plans because it's like, okay, for that 6 months, I just want to make sure that I can go see my doctor and that I got basic things covered. That could be a short term plan. Say you only need a short term plan for whatever reason. Maybe you're in the middle of a divorce and it's you need a short term plan until another form of insurance starts for you. That could be a reason why you sign up for a short-term plan. Now, in Michigan, since I am from Michigan, just always like to give this predicate that in Michigan, you can do a short-term plan for 6 months and you have one more extension of 6 months. You cannot do it past a year. Some other states that we are licensed in, me and our company, MRW Solutions Group, Texas, you can do 3 years of short-term coverage. So it goes all the way up to 36 months. It depends on the state. Again, some states offer a maximum of 36 months. And you really need to work with a consultant that will be able to look at your individual situation, your family situation, right? Because families can do it, but you can't do it as a small business or as group coverage, right? But your family situation to see what benefits are going to be available with that short-term plan. Does it fit your family goals and needs? And we're waiting on the PowerPoint. There we go. Alrighty. So value added proposition. We gotta keep talking about it because we didn't talked about basically we didn't talk about life insurance and what that means. We didn't talked about basically ACA private group healthcare plans. What about Medicare? Well, Medicare, the growth of retirees over 65, disabled health insurance. A lot of people forget that part. We're going to talk about that part, about the fact that Medicare is also available for people who have been disabled for 24 months and approved for SSID. But we're going to talk about that shortly. So this is like a chart, right? Like, oh wow, Monica's a great chart. But let's explain the chart, right? So this is the blue line is Medicare enrollment by the millions. As you can see in the 2000s, it was like 39.7 million people in Medicare. By now, which is 2020 in this decade, at the beginning of this decade, it was 64.3 million people in Medicare. Now, a lot of that can be said baby boom generation, right? It was a lot of people in the baby boom generation. We're getting towards the end of it, honestly, and we'll be moving. Excuse me. I just want to make sure that I put this on decline. And we'll be moving towards the not too long from now. We'll be moving to the generation X into Medicare, right? So yeah, so that accounts for a lot of these people that jumped on Medicare in between 2000 and 2020. But look between 2020 and 2030. So we are still looking at about 18, 17 million people that will come onto Medicare between 2020 and 2030. You can add about another, give or take, 8, 9 million, maybe 7 million between 2030 and 2040. And then it jumps again, right? You'll see the growth of Medicare. Now, the biggest growth was 2010 through 2020, but there's still 2.4% growth between 2020 and 2030. And you can see the subsequent numbers there. So just we're going to take a very quick break. Until then, I'm just going to basically have you listen in to, and give me just a second. The presentation is not over. We're just going to take a very quick break. We're going to grab some music and have you listen into that real quick while I come right back. We're about halfway through the presentation, so we're going to do some YouTube royalty-free music. And it'll be coming up in just a moment. Now, meanwhile, between time, this would be a great time. Go grab a snack, go get some popcorn, whatever it is that you think is good. You can go do that right about now. We're going to listen to this YouTube royalty-free music, and then we will be right back here. And I try to say when we're going to be back. Probably in, let's see, about 4 minutes and 58 seconds. All right. Okay. So let me go ahead and let you listen in. Okay, we're going to get Okay, our mic should be, yep, we are good. We're connected. So, okay, we're going to continue the presentation from here. And we were at basically the Medicare, right? So let's go forward. All righty. So, all right. So the Medicare population is projected to increase by 54 million beneficiaries today, over 80 million beneficiaries by 2030 as opposed baby boom generation ages into Medicare. And we can also count that as the Generation X, the beginning part of Generation X too. All right, between 2010 and 2030, the older populations, persons ages 65 or older, as a share of the total population is projected to jump from 13% to 20%, doubling the share from 1970. Demographic and population changes also affect the number of Medicare beneficiaries that are entitled to Medicare on the basis of disability through the Social Security Disability SSI program. Currently, individuals under the age of 65 who are entitled to SSID payments are eligible for Medicare for 24 months after their disability begins. So, if they're eligible for SSID payments, they've been disabled for 24 months, regardless of their age, they can go and get into Medicare. Also, for SSID, it started in 1954. Over the past 3 decades, the number of SSID recipients has grown significantly from 2.9 million in 1980 to 9 million in 2013, and we can probably say it's 2020 now, so we may be even up to 11 million or more. A part of this growth of SSID enrollment is due to demographic changes. The rates of disability are highest for individuals ages 55 through 64. All right, let's keep going. Now, what is Medicare? I get this question all the time. Like, what is Medicare? What is it? What does it do? I mean, people know, okay, it's an insurance for people that are over the age of 65, and maybe you learned today that it's also an insurance for people who are disabled that are on SSID for more. SSDI for more than 24 months. But like, what does it consist of? Well, okay, let's talk about that. Okay, so let's talk about Part A, Part B, Part C, Part D. And no, those are not just letters of the alphabet. They are actually the parts of Medicare. So Part A is a hospital coverage, inpatient hospitals, including critical assets and also long-term care hospitals. Part A, hospital insurance. Part B, medical coverage. That's your doctors, your labs, your outpatient care when medically necessary. That is Part B, the medical coverage. So medical coverage is anything that does not have to do directly with the hospital, is basically medical coverage. So like if you go to the chiropractor, that's medical coverage. You go to the podiatrist, that's medical coverage. You go to the get allergy, you go to a doctor that can treat those allergies, that's medical coverage. Going to the dermatologist, that's medical coverage. That's all going to fall under Part B. Now, Part A is a hospital insurance. Part A does, and I always like to make sure people know you get that automatically. Now, that does not mean that you do not have to pay because you get it out automatically. There is a co-insurance. There is a deductible, right? Even though it's at 100%, yeah, it's still there. Okay, so basically that co-insurance applies if you get into the hospital. You have to pay a certain amount basically for hospital days of hospital stays up till day 7. Then you fall into this gap where it's covered at 100% again, and then you can fall back out of it. Basically, the longer that you stay inside a hospital, particularly anything past the 61st day. You can be up to almost like $904 for your hospital stay. Those first 1 to 7 days, it can be like $354. But there's things to help you take care of that. So I just want to talk about that real quick. Part B, which is a medical coverage. That's okay. So we got 80/20, right? What does that mean? That means 80% of the cost is being paid by Medicare, 20% is by you, right? So that's part B. Now, what is Medicare Advantage plans? Well, this is awesome because it includes Part A plus B plus got extra health benefits. So, in other words, basically, and a lot of times that's almost like a gap in itself, a gap filler, because it can help pay for those deductibles and copays as it relates to Part A, Part B. It can also basically provide other benefits, sometimes transportation, sometimes basically meals, sometimes basically fitness benefits as it relates to that Medicare Advantage plans. All different Medicare Advantage plans are different, so you have to know what the benefits of that Medicare Advantage plan does provide. This good thing is that they also sometimes, and most of the time, include Part D, which is a prescription drug coverage. So Part D is separate if you do not have Part C, right? Can we just look at Part D is separate to Part A and B. Think of it as a letter of the alphabet minus C. So in other words, if you don't have Part C, if you don't partake in Part C, you have Part A and B, and you can elect Part D, right? Part D, though, is you have to kind of pay for that, which is your prescription drug coverage. Now, that can be a standalone plan, or you can have it as a part of a Medicaid Advantage plan. Okay, so like next, we were talking about the 80/20, right? We were talking about the co-insurance as it relates to Part A, sometimes like co-payments, right? How can you like end that? Well, how you end that or lessen it is basically by Medicare supplements and Medigap plans. Those are great things in order, again, we're talking value-added propositions. Life, health, and wealth. We want to save your life, health, and wealth. We don't want you to have to go and get hit with that 20% on your facilities, pretty well, actually, medical, doctors, etc. We don't want to get hit with that, right? We don't, you're retired, you're disabled. The last thing you need is to be trying to figure out how to pay that 20% as it relates to Part B. Part A, we don't want you to get hit with, if you go in hospital, you got to pay for these days, right? Initially. And like, okay, so how do I pay for that? Okay, I got limited income. Well, besides Medicare Advantage plans, there are Medicare Supplement or Medigap plans. So want to talk about and highlight these two with these stars, right? These two with these stars are no longer available. They actually stopped being available January 1st of 2020, and that is because basically Medicare changed the way that they will allow for Part B, which is excess charges. See that part right there? Right? They will allow for Medigap plans in order to pay for those excess Part B charges. Not allowed anymore. What those were at that point in time was to have the Medigap plan pay your Part B premium, right? That was excess charges. That is now, nope, not allowed. So those two Medigap plans. So the Part B premium is included in every single Medigap Medicare supplement plan because they don't have Part F and G anymore. The other things that you want to look for is what does it pay, right? So we got benefits over here, right? So we're going to talk about, because F and G are literally no more, we're going to relate this as it relates to Part A through D. We're talking Medicare supplements, Medigap plans. We're not talking Medicare itself, which is A, B, C, and D. I know these letters get confusing. I get it. But what we're trying to do is make sure that you understand, so that you had a proposition for your life, health, and wealth. So A through D, right? And then we're going to move over through K through N. So we're going to skip F and G of the alphabet. It's okay. It's okay. All right. So in this case, we're going to just look at the benefits, right? We're going to go down this line. So Medicare Part A coinsurance and hospital costs up to additional 363 days after Medicare benefits are used. Whoops. What does that mean? So basically, Medicare will pay for days 1 through 91. You may have some costs in between there. Then you get this bucket, right? This bucket is called the lifetime bucket. And that's literally what it means. What the lifetime bucket is that you have from day 61 through like 120, you have these days that can be used, but when you use them, you do not get them back. So what they're saying here is that they'll cover 363 days after Medicare benefits are used, right? So that's what that benefit is with Medigap plan. All right, so then you have the Part B, which is the co-insurance and co-payment. We talked about that. First 3 pints of blood. I always like to talk about that. Medicare does not pay for the first 3 pints of blood if you got to have a blood transfusion, right? The Medigap plan or your Medicare supplemental plan you can get additional deductible Medicare replacement. That's kind of like Medicare, Medigap plans that will help you pay for that first 3 pints of blood. You can get it inside of a Medicare Advantage plan. But if you're on original Medicare plus Part A plus Part B, and that's it, that's what you want, that's fine. You can make that selection. So then at that point in time, the first 3 pints of blood is not paid for. So then you also have Part A, which is the hospital co-insurance and co-payment, hospice co-pay, hospice, make sure we have that correct, care and co-insurance. That's separate. For Medicare, it's a little separate. So what that does with Part A is with a GAP plan, it helps pay for that. Skilled nursing facility care co-insurance, depending on the plan. Part A deductible. Some plans will pay your Part A deductible with Medigap. Some plans will pay your Part A deductible with Medicare Advantage. Part B deductible. Some plans, again, the some plan for that one is Part C. It is it. That is it. That is still available. C. And that is rare. Okay. So then you got foreign travel for emergencies. Okay, so again, we're eliminating, putting the big old X between F and G. So when we're looking at A through D, K through N. We're looking at that C and D. And then basically M and N will basically pay for some foreign travel emergency care, right? That does have a limit about $50,000. So just make sure you know that. So that's another reason why if you're going overseas, you might want to look at saving your costs and getting some type of travel insurance. So as you can see, there's varying parts between 100% here. Over here, you have K through N. It depends on what type of plan that you're getting with Medigap plan, but it can be anywhere from 100 to 50%, depending on what it is the benefit is. All right. Annuities. Let's talk about annuities. Let's explain how they work. That is a living retirement plan. Annuities is a contract. It is between you and an insurance company that requires the insurer to make payments to you immediately or in the future. When you buy an annuity, you're either buying it in a single payment. So, okay, I just got a little money, right? $50,000. I want to throw that into an annuity plan, right? So that's your single payment. Or a series of payments. I want to get an annuity plan. I want to put $100 a month towards my annuity plan, right? Similarly, your payout will come either as a one lump sum payment or as a series of payments over time, right? The good thing about annuity is you don't have to be necessarily a certain age before you take it. I mean, like, it's a retirement plan. You should want it to be a retirement plan, but just say you got an annuity at 40. You want to take it at 60. It's okay because it doesn't have the same restrictions as a 401k or 457b or even maybe a pension plan, right? Okay, so then death benefits. If you die before you start receiving payments, the person you name as your beneficiary receives a specific payment, right? So you unfortunately you pass. You got your wife. She can either have that annuity the way you specify it paid out as a lump sum or paid out again as payments over time. You have to specify that though in the annuity. Taxes for growth. You pay no taxes on the income and investment gains from your annuity until you withdraw the money. So I'm explaining that a little bit more inside of the upcoming slides, but I just wanted to kind of give you the ABCs on how annuity works. So, how are they? They can be fixed, variable, or index. Let's talk about fixed. The insurance company promises you a minimum rate of interest and a fixed amount of periodic payments. Fixed annuities are regulated by the state insurance commissioners of wherever state you live in. Variable annuities. The insurance company allows for you to direct annuity payments to different investment options, usually mutual funds. Your payout will vary depending on how much you put in, the rate of return of your investments, and expenses. Now, on this one, the SEC, yes, the Security Exchange Commission, regulates variable annuities. Oops, we got to go back. I am so sorry. Slide went forward there. Index annuity. This annuity combines the features and securities of securities and insurance products. The insurance company credits you with a return that is based on the stock market index, which we know can go up and down, such as the Standard & Poor's Index. Index annuities are regulated by state insurance commissioners. So the variable annuity, that is the one where you're getting, the SEC is regulating it. The fixed and index are regulated by your state's insurance commissioners. All right, let's look at accumulation and payout phases inside of annuity. Okay, so we're going to talk about Joe. Joe basically at the age of 50 decided he wanted to do an annuity plan. He wanted a 3% return and he paid $100,000 for the premium. Okay, that's what he paid up front in this case, right? It accumulated with that 3% return. Boom, it got $155,800, right? At age 65, Joe said, I want to take my money out. So then basically, is this a payout phase? That is payout at that point. It's going to be paid out over 20 years. So basically, that's going to cover Joe till he gets 85. He's going to get an annual income from that annuity from $10,470, and only $5,470 of it is actually taxable, right? So that's basically going to get that payout every year. He's going to, yep. There you go. That's how it works. Oh, that only taxable is basically that lifetime too. All right. So, yep. All right. Moving forward. Okay, what is deductible replacement insurance? A lot of people hear about things. They hear about things on TV, hear something about something with a bird. Okay, let's talk about what it is, though. Deductible replacement insurance comes in many forms. So HMAs or health matching accounts. So a health matching account is ultimate medical expense savings accounts available to save both money and on out-of-pocket costs, medical expenses, and can decrease the primary insurance plan's deductibles by saving up to 40% or more on premiums over time. The HMA awards its owners with up to $2 in medical benefits or more for every dollar contributed into an HMA account balance as the program progresses, allowing for the decrease overall health insurance deductibles, co-pays for services, monthly lower premiums, as it is designed to cover out-of-pocket costs, medical obligations, for deductible medical expenses. So that's like a HMA. A lot of people hear, I got a flexibility account in my job, but I'm not in my job anymore. So my job is telling me I got to use it or lose it, right? And I got to use it quick in a year, right? So HMAs are a little different. They kind of are with you. They're with you unless you are not doing it anymore. So if you decide to not want to put in your contribution for them to give you the matching funds, then the suggestion is that you use what's in the HMA account, right? It's no year tied to it. You can keep running an HMA account as long as you want. But I tell people, if you are doing an HMA account and you decide you don't want to do it anymore, you better use what's in your account, right? Because if not, you lose it. That's the only time you lose it. Otherwise, that it stays with you. It's not the flex benefit plans. You have a certain defined period. You have to use it in that time. And then if you don't, that's it. HMAs, it is your monies plus the bill to use. You can use it as long as you want. If you decide you want to get out of it, that's when you need to use it or you lose it. Alrighty, let's talk more about deductible replacement insurance. There is other deductible and replacement insurance plans, including critical illness insurance. It can pay a lump sum if you're diagnosed with a specific illness, such as life-threatening cancer, heart attack, kidney failure, stroke, a coma, or more. Lump sum cash benefit insurance. Those can be for accidents, hospitalizations, serious illnesses that can help pay high deductible plans or low ones, or they can actually pay you. Also known as hospital indemnity insurance. So, like if you go in a hospital, you have to stay there for 7 days. Indemnity plan of this nature could help pay you, right, $250 a day for those 7 days. And then basically you use that to pay your deductible or pay you because the money is coming to you. So those are kind of like cash some benefits insurance. Right, accidental medical insurance, just like it is benefits that may cover medical expenses resulting from any covered accident. Okay, let's talk about reimbursement for vet visits, domestic, international travel protection, dental, vision insurance, because your teeth and your eyes are important just as well as your pet. All right, so everybody knows dental insurance is, right? Dental insurance, basically, I gotta get my teeth clean. I gotta make sure, my gums are good. I gotta make sure that I can go and get, a filling, or better yet, even maybe a root canal. That's dental benefits, right? And you don't want to pay that out of pocket because when you do, it can cost you more. Yeah, you can always negotiate. Some people negotiate basically their dental prices with their dentist. Sometimes there's schools that can help you pay less because they have students working on you in comparison to dentists, but still, it's always saving you money if you have a dental insurance plan. Yeah. So that's something that you would want to consider. And plus, you have family, you definitely want one. As you are looking into Medicare, right? This is the caveat. I'm not going to go back to the Medicare slide, but many Medicare Advantage plans include some type of dental or dental or vision benefit stipend, right? Some Medigap plans do, but otherwise that, if they don't, you got to buy that separately, right? If you want that. So those are things that you want to look at. You want to look at cost saving options for you. Again, this is about value added propositions. Oh my goodness, look at Fido there, right? Fido is so cute, got a little heart necklace on. Okay, so you want to take care of Fido, right? You want to make sure he is okay. One way to do that is you can do a pet matching account. Yeah, it works. And it works just, it's kind of like, again, your pet goes have to have some work done at the veterinary clinic, have to get a shots done every year, things that are important to maintain the health of your pet. You can do it just like for yourself. You can do a pet matching account for your pet too. Or if you got more than one pet, because a lot of people have multiple pets. Yeah, it works for Fido. And if you got Kitty over there, it can work for both of them. Travel insurance, we talked about that. We talked about it, but I'm going to talk about it again. Again, going domestic, international, also student. So we talked about that a bit, but students are beginning to come back from overseas soon because now things are opening up. So they may be coming over to study. You may be having foreign exchange students living with you. Your kid may be a foreign exchange student themselves. Travel insurance and also student insurance covers them. Also, basically, you're going on a mission trip that can cover you while you're on your mission trip against any illnesses, etc. So those are things that you want to do, value added propositions, because things are opening up. Think about that. Last thing, Your eyes are so important. And so you may want contacts, you may want glasses, you may need to get glaucoma screenings, you may need to get LASIK eye surgery, right? You don't want to pay those costs out of pocket. That is what vision insurance covers. These are equally important life expenses that can provide life protections for out of pocket expenses that can provide a peace of mind. So when we're talking about the value added proposition, you have to look at the whole person, right? You have to look at life, health, and wealth. That's basically how you are managing everything as it relates to the person, the individual, and the family, right? That's what we do at MRW Solutions Group. We look at the value added proposition as it relates to you and what can we give you or offer you, right? And what is it that you believe that you need in your life in order to make sure that when it comes to total body wellness and protecting your financial position, you are there, right? That's what we do at MRW Solutions Group. Okay, normally we would take questions and answers at our presentation at this point, but obviously we're in a presentation, so it may not be any questions and answers. And if there are, please put those. Feel free to, I'm going to give you our email. Feel free to email us. We'll be more than happy to answer any questions that you may have that's outside of this presentation that we have done here on HAPS today. So with that, are you covered enough? See, that's the value added question that I always like to ask at the end of this presentation. Are you sure? Not sure? Still thinking about it? Monica, you presented me with a lot of information. I didn't know that you are basically MRW Solutions Group can consult me about so many different things. Yes, we can. So if you're not sure, here you go. Let us chat with you. You know, our consulting services are zero charge. Zero, just to sit and talk to you. Yeah, we can talk to you, look at your life situation, see what it is that you may need, give you suggestions, options, and then you can choose, right? So our hours to do so: Monday through Friday, 9:30 to 4:30, Saturdays 10 to 2, evenings by appointment. That is my email. Monica RW at mrwsolutionsgroup.com. My phone number, 734-328-3025. That is also the number for MRW Solutions Group. Just say, for instance, right, you wanted to go, and I'm just going to show this information, so I'm going to pop off of this, and I got to pull something else up. So please bear with me as I do, because I have to move from one screen to another. So just say, for instance, right, you got on our website, and I'm going to show you the website in a minute. So it's just coming up here, so it takes just a second. And then I have to change my share screen. So yeah, just bear with me. Trust me, this will get done. All right, so let me see here. All right, so we're going to change our share screen. I know there's a way to do this, and it is. Okay, so let me go into presenting. I'm actually going to stop presenting. I'm going to put this information up here for now. All right, so give me just a second. I'm going to stop presenting. And then we're going to start again. So just in case you have any questions, like, okay, Monica, what can we do if we go and sit down and consult with you? Like, what does that mean? How does that work? Why is that any value added proposition to our life? Can you tell us directly? Because of course, time is valuable and no one wants to waste their time, right? So, okay, I believe right now you should be looking at our website, right? So I'm going to give it, that's the MRW Solutions Group. That is our website. You can go on there. When you go on there, you'll see obviously what we do. Talks about, are you covered enough? Because that is very important to us. Talks about some of the things that we have actually just talked about in the presentation. Gives a brief overview of some of the insurance partners that we offer. That's me, right? It talks about my vision, which is very important to me because this is what I do for you. My business core motto is summarized in a quote: "Do more that's required of you." Right? To each of our clientele, we are to do more than what's required of us for each of our clientele. All right. So we got reviews there. Feel free to look at them. Right? I'm going to scroll back up because the rest is just talks about our hours. So if you wanted to basically talk with us, again, we don't charge to do that. Those are called insurance consulting services. You pick your service. Just say here, I want a health insurance appointment, right? So okay, you go on there. Basically, you put in very basic information because we're just talking to you. We don't need information about like everything about you. We don't need that just to talk to you. So basically, it's gonna be 1 o'clock. You got the 24th. Yep, that's what I want. And so from there, that's it. Name, email, phone number. You can add a message. And what happens is that you're going to get a Zoom link. And then basically, we're going to confirm it. Now, if for some reason you don't do Zoom, don't worry. Still fill out the information. We can call you and do the appointment also. So that's not a problem for folks that may not, do Zoom. We are okay with that. So I'm just going to go back a little bit. So that's how you can like book your appointment with us at any time. Basically, that's up to your convenience. We have a whole schedule online that you can fall into. And then I want to talk about basically the Medicare 101 education. This is what we really like to make sure people understand the benefits that are available to them when they turn 65 or if they have certain health conditions. They have a whole page that's dedicated to this. And we have, like we call our turn to 65 events. We got some events coming up. A lot of events coming up if you're here local. So feel free to tune in, jump in, come and attend one of our events. If you so prefer, we would love for you to be there. And then obviously this is just information. If you want to just get a quote without actually booking an appointment, we would prefer that you do a consultant services with us first because first of all, it's not cost you anything. Second of all, we can actually again look at your total again value added proposition. But if you just want to book a quote, you can do that. Some information on how to choose us and how to contact us. So that's our website, www.mrwsolutionsgroup.com. We pride ourselves on 3 words: insurance made simple, as you can see right at the top of our page. All right, so that's that. So that's pretty much us. That is the presentation today. Hopefully you learned some information that you didn't know when we started. And sorry about that little break in between there. I had to take that call. Hopefully that would be forgiven. If you have any questions, again, I'm going to put some stuff up here, some notifiers, because I was doing a presentation. So it's kind of, you don't want to put up the notifiers in the middle of the presentation. It kind of gets things all off. That's not good. But if you would like to notify, I think that's coming up now. Yep. Yep, it is. Basically, our website information, mrwsolutionsgroup.com. If you have any questions, I'm going to put up that little notifier, which should be coming up shortly. And that's info at mrwsolutionsgroup.com. And then talk about, obviously, the value added proposition, which is what we have presented to you today here on CV. So that's we're wrapping up and pretty much. Oh, I'm sorry, I have to push it to the program. I'm sorry, I got all 3 of them up, so now I got to push all 3 of them to the program. So you'll see all 3 of them coming up shortly. In regards to the value added proposition. Any questions, feel free to contact us at mrwsolutionsgroup.com. We are also on Facebook at MRW Solutions Group, LLC. Please follow us. Let us know if you enjoyed this presentation. Just leave us a comment. We'll post it to the page. We love posting comments. Also, basically, again, you can always contact us by email, MRW Solutions Group, info at MRW Solutions Group. We are also, let me see, where else are we? Well, we got Facebook, and I think we are also on Instagram. We are not on Twitter at this time. We'll probably be getting on Twitter sometime soon. So hopefully you enjoyed the value added proposition, life, health, and wealth management solutions. With that, we're going to be ending the show today. We appreciate you tuning in. And until we see you next time with another presentation, take care and have a great and wonderful day.